Hello everyone. So today we are going to discuss another penny stock which is named Hathway Cable and Datacom Limited. So one thing which which we are aware of, or I want to make you aware that this stock is backed by Reliance Industries, which is one of the reason why I have choose this stock because a company which is pricing below or at the 20 rupees pricing and which is backed by Reliance Industries. So we have to look into that what are the prospects and what are the features that the company is offering right now, and accordingly that we will decide whether the financial statements are sound or not sound, or we have to get into that whether the financial statements are according to the way it should, and they are whether they are giving a good prospects after being backed by Reliance Industries or not. So if we look at the key points and a brief introduction about the company. So the company is in, I would say, distribution of it is an internet service provider as well as cable television provider, cable television services, which is backed by Reliance Industries, having 53% of share. Reliance Industries provide their fiber optic services through or wired services of through this company, and the company is having business of around. Currently, the company is having cable television as their prominent operational segment, with the 66% of revenue split, and the broadband services are offering only 34%, which is going to I think that the in next coming years the broadband services, this number is opposite, and the broadband services will go beyond 50%, and the cable television obviously reduce because of the various factors that are being playing, like e- e- Netflix and all those, I would say, OTT platforms and other things that are going to somehow or the other disrupt the cable TV business. But the broadband business are showing a good prospects, and we have to look it accordingly. However, cable TV business is having their majority earning and the share, which is the reason why the company is having dominant position in that segment or area. Looking to the various factors like the market capitalization, so the company is having market cap of 3685 crores, around 3600 crores of market capitalization company is having. It means that the company is a small cap company with the current pricing of 20 rupees, and the other factors like the stock is having a PE of 37%. So the PE of stock is 37.13, and the median PE is 42.98 or 43. So company like this, which is having backed by Reliance Industries, and PE is less than what the median PE is, so that shows that the stock is an undervalued stock, and the kind of backing the stock is getting, if it has a PE of 50, then it would not be an issue. So there is a potential which seems to be in this stock. I would say that the quarterly results, if you look at the quarterly results, so in March 23, the quarterly results are 460 crores. Looking to the same quarter in March 24, it shoot up to 493 crores, which shows a 10% in sales growth. However, the profitability has not seen a growth in terms of the kind of revenue or the turnover company is having. That is the reason because of which is the operating profit margin. So the manufacturing cost of company has increased significantly, and the operating profit margin from 26% of its peak, they have reduced to 16%, and that is why their profitability or the operating profit margin has taken a hit, and the company is having around 35 crores of quarterly profit. Looking to the yearly data, so the company is having a yearly data of around 1981 crore rupees in March 24, which is approximately 10% increment growth in the from the previous sector from the previous year. Looking to the profitability, so the profitability is around 99 crores, which is a growth obviously in terms of, if we compare it with March 23, because in March 23 or 4, the profitability has taken operating profit margin has substantially reduced, and that is the reason why the kind of sales the company is having, which the kinds of sales growth the company is having is not reflecting in the profitability as well. But the thing which we would consider that the company is having a sales growth of not mere sales growth, but in last quarter or last 12 months, the company is having speedy sales growth of 7% as we compare it with its past historical records. Looking to the profit growth, so the company is having a profit growth of more than 50%, as we all have seen that 60, from 65 crores is goes to 99 crores, which is more than 55%, and that is the reason why the stock is having a good profitability. And in last 5 years and 3 years data, the stock is not showing that profit or the growth because the company has went to the liquidation, and the reason why that the company is having too much debt. And if we look at the 62, 138, 159, and the reason why the company is having shown negative profitability growth is because of their I would say the more amount of or a higher amount of the profitability, a higher amount of the interest which company are required to pay it. But the profitability has increased because the company has no debt, and the Reliance has paid off their entire debt as a scheme of arrangement or in insolvency. The company has went through insolvency, though Reliance Industry has taken over this company and pay off their entire debt. Now the company is a debt-free company. So if we look at the March 20 data, it is around 1975 crores, which is reduced to 0 crore, and then mere borrowings, which is not be an issue with the company having a cash flow of around 200 crore rupees. So looking to the profitability growth, so obviously the reserves are decent enough, and the equity capital is around 354 crores, which is being infused at the time the company is being taken over by the Reliance Group and other peers. Looking to the borrowing, so the company is not having any borrowings, which is to be discussed over here. But the other things like trade payables, so the company is having trade payables which has been grown consistently of, and it has increased to the 386 crores. On the other hand, the company having trade receivables rather than the trade payables, so that would be a good signal that the company, even though the company is increasing its sales, but the company is having less trade receivables than trade payables. So the company is good and effective. Company can effectively manage their working capital, and the company does not require any funds for the working capital from their existing equity funds or the reserve funds. The company is sourcing their working capital requirements from the trade payables itself, and company do not have to block their own funds in that. Looking to the cash, so the company is having 189 crores of cash, and the company is having more than 100 crores in last 4 or 5 years in a row. So that would be a good indicator that company will not be having any cash crunch in next future, next run or the incoming future. So looking to the operating activities, so in operating activities there is an issue like which seems to be in at the superficial level, that the company is having a operating cash flow of I would say more than 400 crores, but there is a negative cash flow of 410 crores. So let's look into that. So the receivables, obviously the company has increased their receivables, and that is the reason why there is negative. But the main issue is operating investments. So the company has did an operating investments. The reason or the what are those investment that is not visible or that is not available, so we are not able to discuss, or you can discuss it, or you can look into that if you go to their websites or anything through which maybe there may be a chances that. But apart from which, I would say that the operating investments are solely for the operating purpose, and that is the reason why the I would say the receive profit from operations or cash from operating activities was negative. But that would not be an issue with a company like this, because they have made an operating investment of 700 crores. So if we remove that operating investment, so company is having more than 3 or 400 crores of operating surplus cash flow. Looking to the cash from investing activities, so company is having an investment of around I would say 2400 crores, and the fixed assets purchase of 220 crores, but the investment sold of 228 24 crores. So the cash from investing activity means the company is having more sales than what they purchase as an investment. So well, that would be an that would depend on the management whether they want to retain their investment or divest there. So with a fluctuation of more than which a transaction of more than 2000 crores of purchase and then 2000 crores of sales, so mere surplus of even 200 or 300 crores in investing activity will not be an issue, and will not challenge or will not give an indication that company is divesting their investment. Because as we've seen in operating activity, the company is having in 700 crores of investment in operating capital. So even if we combine it, so then also the company is having a operate investment more than what it was in previous years. Looking to the working capital cycle, so the cash conversion cycle is 33 days, which shows that the company is recovering their cash in just a month, and that would be a good indicator that the company is having a decent, effective, and workflow cash management system. looking to the other factors like promoters. So the promoters are having 75%. That is the upper cap limit and the maximum cap limit a promoter can hold in any listed company. So the promoter is having their highest cap limit and touching their limit of 75%, which would be a good indicator that the management are heavily invested in the stock, and they are this shows that the prospects they are looking for in the company in near future. Obviously, the broadband services are going to be boomed in next few years, and if they tap into rural market, so obviously the shares from the cable has been shifted to the broadband, and the broadband services are giving you more revenue than what you are recovering from the cable services. So that is a good prospects. Looking to the FII, and FII Government Pension Global has increased their stake from 1.30 to 2.8%, and continue to remain their stake for more than 3 or 4 years of time. But well, the government of Singapore has divested some of their stakes, and I think FII is having more than 4.65% or 4.5% of shares. That is a good thing in a penny stock like this. And this stock does not remain penny if it has been backed by one of the most influential or the one of the most prominent player in this sector. I would say in Geo, or Geo is obviously being a prominent player and the market leader in internet services providing, and I would say data services. And if this company is backed by them, so even if the market cap is less, but that would not be an issue, and this stock is not regarded as a small cap stock or a risky stock. But obviously, stock market is always a fragile and risky, and there will not be an there would not be a situation where you can say that the stock is not going to go down, or the stock will not be going to slow down, fall, or anything, because the stock market is always subjected to risk and fluctuation. So guarantee is not available in guarantee. We would not give a guarantee for that, but the prospects of the company seems to be good. But if we look at the other factors like the so stock has not given a return in last 5 years or 3 years because of their insolvency and the I would say liquidation, which has been various issues like bankruptcy and the things that has been going through the company, and the company is in process for that for so long. But in last 1 year, the stock has shown a momentum from 12 and 13 rupees to reach its peak at 26 rupees. And again, the company has been moving to the still the company is at 20 rupees per share. That shows that the company has shown some momentum in last 1 year. But the issue with the company, or why you have not heard so much about this stock, or people are not saying too much about this stock, is because of the movement in the stock price. The stock price is like moving at not that much pace as was the penny stock used to be, because of this stability and because of this slow movement in the stock pricing. The stock is not seems to be lucrative as we compare with the other companies, like other companies that are at same pricing with the market cap. But apart from which, the stock is seems to be a decent stock, and at this pricing, obviously the stock is already a discounted price, because I have seen the stock at 20 rupees in 2 or 3 years ago as well, and the stock is currently at has gone to as below as 12 or 11 rupees in March 23. But it has it has shown some strength, and now it is at this it's I would say support level, or a support level of 20 rupees, and that would be I would say that shows the company is in the verge of, or it's showing some of the positive angles, and the stock is maybe at its discounted price. And we would also consider, however, the pricing will not be an issue. The basis of this video is to make you educate about the stock, and how the stock is, and what are their sales, what is their sales growth, what is their profitability, what are the promoters holding, what is the prospects of the business, the company, which is the company, the operations of the company, what are their cash flows, what are their borrowings, what are the promoter holdings. These all are the things that you have to consider before looking into any stock, or before understanding, or before giving an overview, or before getting an overview that this stock is good for you or this stock is not good for you. So considering all those facts, you can take a decision that what are the stocks that you want to look for and what are the stocks you don't want to look for. So on that basis, you should invest. I hope this video finds I hope that you find this video interactive. So this is not a financial advice. Ask I'm not doing any portfolio services. So ask with your financial advisor before investing. I hope you all enjoy this video. Thanks for watching.